Basic accounting debits and credits. What are debits and credits? In accounting, we use the terms debit and credit to record all the money transactions of a business. They are the building blocks of keeping financial records accurate and balanced. Debits, or in short term doc, are always left side of an account. Credits in short term C are always in right side of an account. Hey everyone, welcome back to your channel name. Today we're diving into the basics of accounting, specifically focusing on debits and credits. Understanding these concepts is crucial for keeping your financial records accurate and balanced. Let's get started. In accounting, we use the terms debit and credit to record all the financial transactions of a business. These terms might sound complicated, but they're actually pretty simple. Here's the basic idea. Debits are always recorded on the left side of an account. Credits are always recorded on the right side of an account. This is the normal balance of debit and credit. In debit, asset or drawing, and expense. In credit, liabilities, equity, and revenue. Now let's talk about assets. Assets are resources owned by a business that have economic value and can provide future benefits. Think of assets as everything the business owns. Here are some common examples of assets. Cash, this includes the money the business has in its bank accounts. Accounts receivable, money owed to the business by customers who bought goods or services on credit. Inventory, goods that the business has in stock and intends to sell. Office supplies, paper, pens, labels, staplers, tape, scissors, etc. Equipment items like computers, machinery, or furniture used to run the business. Buildings, real estate properties owned by the business. Assets are vital because they help a business operate and generate income. By tracking assets, a business can understand its financial health and plan for future growth. Now let's talk about drawings. Drawings refer to the money or assets taken out of the business by the owner for personal use. It's important to track drawings separately to maintain accurate financial records and understand how much the owner is withdrawing from the business. Here are the example of drawings. Drawings, owner's withdrawals. The owner's withdrawals are an increase in the drawings account, so we debit this account. Example, let's say the owner, Jane, decides to withdraw $1,000 from the business to pay for a vacation. Here's how you would record this transaction in the accounting books. Let's dive into a specific example of an expense. Expenses are costs that a business incurs to generate revenue. They reduce the company's profit and are recorded as debits in the books. Let's look at an example. Water and electricity costs for water bills and electricity bills in the business. Gas costs for heating and cooking in the business. Internet costs for maintaining internet services in the business. Telephone costs for business phone lines in the business. Salaries, employee salaries, gross wages, commissions, bonuses. Rent, the cost of occupying a property or location to conduct business operations. These include retail, storage, or office spaces and factories. This is the debit side. On other behalf, we have credit. Here are the example of credit. Let's explore a specific example of a liability. Liabilities are obligations that a business needs to pay in the future. They include things like loans, accounts payable, and accrued expenses. Today, we'll look at how to record a liability for a loan taken out by the business. Here are the example for liabilities. Accounts payable, company owes its suppliers for goods and services that have been provided and for which the supplier has submitted an invoice or unpaid bills. Notes payable, written agreements, promissory notes in which one party agrees to pay the other party a certain amount of cash. Accrued expenses, cost incurred for which you have not yet entered a bill into an accounting system, doesn't receive a bill, or missing bills to pay to put for accounts payable. That's why we put in accrued expense. Unearned revenue. Unearned revenues are recorded when payment is received in advance, like rent payments made in advance. Prepaid insurance, airline tickets, online shopping. Taxes payable, one or more liability accounts that contain the current balance of taxes owed to government entities. Let's dive into an example of equity. Equity represents the owner's interest in the business, calculated as the difference between total assets and total liabilities. It includes items like owner's capital, retained earnings, and additional paid in capital. Today, we'll focus on recording the owner's initial investment in the business. Here are the example of equity. Jane, the owner of our business, invests $10,000 of her personal savings into the business. Here's how you would record this transaction in the accounting books. Now let's look at an example of recording revenue. Revenue is the income earned from the business's primary operations, like selling goods or providing services. Properly recording revenue is crucial for accurately reflecting the business's financial performance. Today, we'll focus on recording revenue from a service provided. Here are the example of revenue. Rent revenue. You can earn revenue from rent if you're selling a property to customers or investors. Sales are the exchange of goods or services for money. Service revenue, the income that a business generates in return for completing a service. Dividend revenue, the amount of dividends earned from holding stocks of other companies. That's all accounting is fun. If you enjoyed this video and found it helpful, please give it a thumbs up. Don't forget to subscribe to your channel name and hit the bell icon so you don't miss any of our future content. Thank you so much for watching, and I'll see you in the next video.